Hey, good evening. This is Fari Hamzi. It's hello, December 12th, 2018. We have a special message for you from my liege, my leader, Captain Tico. He he says the following: Merry Christmas, Happy Hanukkah, and Happy New Year. So, very coded message. Do you need to trade futures use service? No, not this package. We have 7 packages. We have quite a bit of products. Okay, but tonight we're talking about timing, PMT Pro and Basic PMT. So no, not for this. And we also offer other trade. Let me address a couple of issues right there. We just found out that because we were acting fast, why? This market is volatile. Let's go through a couple of charts. I'm going to jump back and forth, but I'm trying to drive a message here, guys. Here's our timing chart. You could see how things have been as you exhausting days. These are huge ranges. That was 800 points. This one, I believe, was another 800 points in the Dow. So, and let me go to our performance. Here's how we keep our performance. Here's the chart that's developed. This is as of tonight. Here's our close. This is about 110 trades. Line 1 is the headings. Okay, so that's trade number. We started this package, this setup from last time we tweaked the indicators. We have not touched them in a major way in terms of core indicators from November 14th. Okay, we have had a lot of issues last year. I was I'm sorry, earlier this year. That's the accident I was in. Very bad accident, and that was this was the 2. I got my ass kicked. I lost 12%. Now we'll get to that too. We'll bring up Time and Digest's ranking all of this. Remember, all of these are emails that's sent and are part of the package we show you in the archives. We're very, very, very transparent. That's somebody called what do you call it? Transparency to a fault is my middle name. Yeah, that's how we operate. Look at it here. Obviously, that was a big problem. Came back. I'm sorry, here. Look at these now. Look at this. Lost 15. Look at the wins. We lost one time there, but look at the wins now. 110, 152, 63. Goes on. That's why this has happened. We've just kicked ass. Now, obviously, when the market drops and we don't, it's a double win. This drop here was 12 points. Okay. Now, I'm going to go and get the latest market call there. Let's see. Are we logged in? Hold on. Let me log in. So I'm just going to give you a little quick background and then move on into core stuff. There's an issue I'm going to discuss on size. We do auto trade. When you trade for yourself versus we auto trade for you, we have different rules. Because the brokers, we don't trade for you. I'm not your broker, but I was just informed by a broker that like Interactive is, because of volatility, they are imposing a lot more restrictions on the smaller accounts. Okay. Hold on. That's Time and Digest. Here's our ranking 313. I'm going to bring up our emails. You see how the system works. Here is our email system. So we send a signal out. You guys get a copy. No. There we go. Here we go. We get a signal out in the system. Here's, for example, we change your bias. There's a change of bias. It went out at 16:30 on Monday. That we're getting long here. We write up why. We send it to you, and we send it to Time and Digest. You get a copy. It went out to Time and Digest is the exact copy. If you look at this, went out at 16:30. Boom, right there. Okay, went out. They accepted it. We have to wait till their exception. That means they've received it. They've recorded. Why? There's 150 timers. About 100 plus are in equities. They have some gold. They have some bonds, and then they have a vector that gives the price of the day. What was the closing value of SPX? Where it is all based on XPX close. Why? This is the largest index by dollar value. It is always going to be known that day. They'll never have a day. You'll never have a day that's unknown. They may have a halt, but it's computed. S&P 500, largest names in the U.S. equity, 80% of, largest 500 names by market cap, 80% of U.S. equities. So our mission is to call that. Not easy, but we're going to do it. We've done a reasonably decent job. If you look at last 10 years, what have you. Here's my ranking on the, I don't know if we brought this over or not, but in the old system we did. Here's our ranking. This is 3, 5, and 10. Now, they send us issues. Here's the issue. This issue came in Monday night. I'm going to share it with you. Okay, this has the forecast issue. Here's the ranking. You see where I am. I'm 120 there. This is 123, so there's 23 points ahead of me. Remember, I've lost 25 there. Why? 7 and 5. That's 12 and a half. But you lose, that means the other side got double. I was long, he was short, whatever. However, he got there versus me. But anyhow, so there's a 2x there. So had I not had that accident, yeah. Steve is a smart guy, but he's a day trader almost. He's changing back and forth too fast, but that's okay. That's what he does. On the 6 months, I'm 1. Now remember, I changed. You saw my power. I'm 8 points ahead of the other guy. Now he's also bull. I'm bull. I don't know if he's changed or not, but that's the case. We're gonna keep up that 8%. That's the biggest spread for 6 months. And here I am 8% behind. One guy is a bear. That is a very smart guy. Edward is reasonably new at this. So the last few years have done good. Danny has been around a long time. As a matter of fact, he may even talk in my user groups in LA. So 2% belong that. In this, the move we've been since Monday, it's possible that I've taken over him. So I'm 2-3-1. I'm sorry, 2-1-3. 2-1-3. Well, we'll see. That's not the issue. The point is, I'm not going to be timer of the year. Why? The way this is set up, you have to be one by time you get like 2 weeks of December left. I came within 1 week 1 year. I was 1-1-1 by Christmas. I missed it the last week, so it happens. It doesn't matter. The issue is trading, I think. What is really more important than anything else is your this stuff. Hold on, this stuff over a long period of time. What you've done, okay? Yeah, George lives down here. Is a good friend. As a matter of fact, I'm speaking in this panel here in January. Okay, so we. But anyhow, let's get to timing. Oh, anyhow, let me talk about what happened with this volatility. First of all, you've noticed also on the CME has raised our margins. Number of brokers, RBC, Interactive, they have come up and said, "Hey guys, if you day trade, if you get in and out on a spread, remember we're giving you a spread positions here, okay." As well, this is housekeeping and stuff. I gotta do this. Let me make sure it's recorded. It's good for everybody. So it reduces number of questions. We give you a spread. First of all, don't trade this. This is too late. Okay, we already actually hit our first target. This went out yesterday morning. We hit our target this morning. Oh, I'm sorry. This is yesterday afternoon. We gave actually 1-2 yesterday. 1 in the morning that was stopped out. Okay. Again, we didn't change our bias. We went back in toward the close. Same type of a spread, a little bit lower. The targets were off. This is the entry time, 2642. That was this SPX. That's on our update we've done. We have made it to current price, not the opening price. All of these are put together the night before usually, or in these cases back here at the end of the weekend, Sunday night. We trade Monday morning, but we decided better than using Monday open, use current price at their entries going in as of the time stamp. Why? Because that's our break-even price. Okay. Again, the way this works, you enter a spread. Your timing is based on the SPX itself. Why? Because we do our timing on that, and this is SPY can be manipulated because it's an asset. They can trade it. You don't trade the SPX. SPX is an average. That's a very big average. So as such, it's computed constantly. I think every 6 seconds or so on the average computed. This is you watch for the index itself, not futures. This is the cash. Cash is huge. Again, futures, a single asset could be moved. This is an average. So when you enter in at with the spread we gave you, and this is your target. You pick that target and this stop. As it moves to that target, you take 80% out. You make this your stop, and this is your new target. Now, this is a break. Since it's a break even, it's a runner. That means there's a no lose. Some don't want to do that. In smaller accounts, they take 100% on the first trade. Now, on a smaller accounts, less than 25,000, on the spreads, they're not honoring it with this volatility being high, saying you got 4 trades you can do for a 5-day window. So if you have a small account, with, for example, for our other trades happen, they're going to trade 1 trade for you only. The second one is going to be a problem. They're going to be tagged. So the question came to me, what do you want to do? I said, hey, it takes money to make money. Listen to Murray, Mrs. Murray, telling Murray every morning as he leaves in Beverly Hills Flats, saying, no money, no honey. Okay? This is capitalism. You need to have money to make money. So if the account is small, you're going to be in problem anyway. So my suggestion was trade to the AT, the other breaker. Put 1 trade on. If it's won or lost, doesn't matter. If you hit the winner or hit the stop, you stop, because if you do the second one within 5 trading days, they're gonna flag it. So I'll put it, they temporarily lock their account. Don't do that. Just do 1 trade and stop. There's nothing we can do. We don't set the rules. We are just operate within the rules. And as the volatility goes up, they get nervous. I understand that. They just don't want to hold the bag, the brokers. So have a little bit more in your account. Understand volatility is high. Any other questions operational wise for me? So let me get to the work. Hey, Cherry, what's going on? The original Mula guy, huh? Okay. Hey, Murray, what's going on? All right. This is my true buddy, Murray and Murray. Exactly. Hi, Steve. Scott McRae. Wow. Hi, Andrew. Scotty, what's going on? Dave Wallach. David Gills. Bravo. Lobotsky. Bravo. Wow. Have I been around that long? Oh, my God. Okay, all right. Jim Holder, remember that train ride in Chicago? Yeah, poor guy helped me with my luggage. I didn't know what I was doing. Hi, Melissa. Hi, Michael. All right, let's go. Hi, Ralph. So why don't we get to charts? I think that's what you guys are here for. We will have a special for you, but not now. I can't tell you what it is. Okay. We'll tell you shortly. All right. So let's start with our normal package that you see. I'm going to go through what we send you every Sunday night. These charts. Boom, boom, boom. All right. Again, first of all, when you come in, log in. First thing you do, you watch this webinar. That's our last webinar we had. If you look at down there, that was October 1st. Guess what? Tonight's webinar is going to go here. And here's our archive. Don't forget the archive. Transparency is our middle name. All right. So if that was 11/1, if you go here, there's going to be a webinar there. Oh, here we go. And the dates, these archive dates are Friday closes. Our week starts on a Sunday, ends on a Saturday. Okay. So I'm sorry. Our week starts on a Saturday, ends on a Friday. Correct. So on a Friday, the system automatically goes and grabs the issue, saves it somewhere else. Cannot be messed around. So if you go to the 2nd of November, it shows that, which was a Friday. On Thursday night, we did a webinar. Today's Wednesday. We're going to replace that here. Okay. Here you jump to a new one. All right. Again, that's the archives. The archives are in this format. We go back to that's the time we started. This is right before I moved to Florida, because we started putting this online newsletter on. Before it was a free service, never charge anybody. For our members only. If you have other packages, we have like 12 packages. No, I'm sorry, 7 packages. I'm sorry, there are minor differences as sub package, but mainly 7 packages. We give it a freebie. Well, a hedge guy came to me and said, heck with that. Why don't you charge me and I'll do the, I want the whole pack. I want one dedicated to this. Well, Dr. Levin, who's here, came back and says, Barry, I can't trade. I'm in the middle of a surgery. I can't deal with your emails. Why don't you give me one trade like on Sunday or Monday morning? I know it's coming at that time, and keep it simple. I didn't say stupid, but I add that because I'm not that smart. He went to University of Penn. He's a smart guy. I'm not. Anyhow, so what we did was that we made it a package, and then here's your issues. Everything is there. You go back. All of them are captured. Also, the charts are coded from there. So the charts are there for that time. You click on that. Make sure you click on that. You get full screen. Okay, full detail of what we have done. All right. Let's go to charts. Enough there. Watch the video. That's the how-to webinar. You'll see what we do, what to expect. I suggest not to trade first week. Yeah, to Park Ridge, Bravo Jim. Yeah, do not trade first week. Just get one cycle. Get the womb to tomb from Saturday to Friday to see how we do things. We're on, and there's an issue number there. We're on issue 270. Remember, about 2 years before we go to the small that was going out, we had issue numbers, we had charts, but not as elaborate. We also added PMT Pro, which did two things: gave an option trade there. If you're a PMT, you only get the top. Not in the archive. Your archive, everything's open. Boom. As a matter of fact, we're gonna make archive 4 weeks delay or 3 weeks delay. If it's open, boom, it's yours. We don't care. I mean, you logged in or not. On the new service, that's what we're gonna do. I think we just hold it for 2 weeks. After that, it's open. By then, it's a stale. As a matter of fact, with the market moving this fast, today's newsletter is stale. Yeah, you need to have updates. That also, we will give, as these targets hit, I have 2 of the users in the chat room giving me emails, or in the chat saying, Fari, target 1 hit, target 2, the stop is hit. Why? Transparency. I couldn't do this without them. They've been a tremendous help for me. Ziriad and Bella. Serious traders. They trade OTF with me, other time frames, including the fractal, but they are also PMT users from day one. They've been with me 2 years now. They keep me honest. They remind me. They let you know things are coming. I have to make a decision. Send the email out to remind you guys, including if we hit a stop. If we hit a stop, you need to know. All right. So if you have PMT, you get the top. These are in SPX, the cash, not the futures. Here's your target, okay? I'm sorry, here's your trade. Here are your targets, here's your trade. There are an SPY call spread. Please do both. Don't come here and be a cowboy just to do one leg. Why? Why do we do that? When you do a spread, you put out, first of all, less. B, the short leg protects you in case we're wrong. Can Fari MZ be wrong? Yes, of course I can be wrong. I'm just another human being. Stop sending me these emails calling me I'm Jesus, I walk on water, I'm Moses, whatever. Stop. I'm just another trader, okay? We could get into trouble very easily. Imperial Hubris. Remember that book? Yeah. We're just gonna be calm and humble and comfortably numb, as Led Zeppelin. Is it Led Zeppelin? No. Pink Floyd tells us. So, and I try to do it in the morning on Mondays. I've got my targets ready. I'm sorry. I've got my bias here ready, right here. I've got my bias here ready coming in. This is it. This doesn't give. Every once in a while we may give you extra chart and update, but we usually don't. Midweek. But this comes on Sunday night or Saturday afternoon, depending what kind of schedule I'm in. This is typeset in the morning, and we do what's called companion chart a few minutes later to give you these levels. This is SPX, or level chart, and this is comparable SPYs, okay? Just to give you some clarity. That's all. Now, the traders here, we put these on. We look at it again. Now, this was a short. You see our latest bias right up there, short bias from this level. And just for transparency and custody of the trade, there's a one before that, so you know exactly what we have done. These are what's recorded with Time and Digest. You're welcome to call them. You're welcome to write to them. They'll verify all of this. We keep track of it here, and every time the trade bias changes, it's there. This is plotted. We took the label out because it was getting too crowded. Also, we took every tick out. And because people were trying to figure out I'm long or short, you can't. It doesn't work like that. Plus, this is not when the market doesn't move. If I'm flat, when I go flat, there's no data there. This is from change to change to change. We're not trying to plot. This is if you bought the S&P and held it. You'll be up about 30% since November of 14. So in 4 years, we've been up about 30%. This is what we call buy and hope. Buy and hope. This is what your broker does for you. Buy and hope. But it's cash. What we have done here by taking long and short, given our discipline on how we do that. Here's would be your PMT return, and this is the differential right there. What we put up there is the latest differential, and you've seen this. We start plotting these about somewhere in here. As we have a few days, we can plot it more forward, and we're on 111th in this format trades. Okay, so we're up 64% on cash. Market is up about 30. So net, we have beat 34%. I challenge you, go to Morningstar, find somebody who's done this well. Okay? Yeah. And look what we charge you. It's nothing. It's peanuts what we charge you compared to, yeah, some hedge guys have done that, but they have huge minimums. You lock up the money for a year or so, and they get very large fees. We haven't done that. Nothing like that. Now, how do we do it? We're going to get into that. Okay, let me get this out of the way. All right, so these charts come to you. I'm going to get to this chart. So timer chart, first chart. Here's my opinion. Okay, here's my opinion right now. We're in a process of basing here, although we have a lot of bad news. We've got political bad news from Washington. We got dollar debasing by China and Russia. We have a national debt that is screaming at us. We have trade wars, tariffs that's raised the cost of goods for consumers. We have we have debt crosses. Here's our debt crosses. We started with transportation first, usually leads. I'm sorry, actually this came in first. Russell did, then came transportation, then came in NASDAQ, now S&P. So you're gonna have some forced selling coming up, just inevitable by large traders, okay, money managers and so forth. So unless we have some firm signal that we're basing down here, okay, maybe the stuff with tariff with China, dialing down on the rhetoric between on the car imports. Although I just read that the biggest beneficiary is going to be most likely Europeans, especially Benz and BMW. But unless we get some firming up here as far as what we have here on SPX, this process down here, because we're set up to go up. We got 3 checks down here. We're long now. We're long as of this price. Okay, we switched on Monday. We were long here. We covered. Went long that night. We took that. Went short. We came down and long now. Dizzying, very very dizzying, exhaustive, and we've destroyed the competition there. On the we were not this good because we messed up here a little bit. Okay, we came down. I had a small mistake there. Came down. And I'll be absolutely honest with you. We caught up, and then I got sick. I was very, very sick this day, extremely sick, and I had a very bad, extreme cold back there. I could not even get myself to my desk, much less to analyze the charts. So I had to pay for that, and I sat through, but it came back down. Of course, remember, with the pre-MT, because we use call spread or put spread, those are defined risk, which means we have a small amount at risk. If it goes wrong, plus I make sure our spreads our stops are close. So if you're wrong, we're out. Boom, done, out. Okay, nothing. But if you're right, you have a runner. Okay, and because we're catching the long and the short, it's a rubber band. If we catch it right, it's a trend following. I'm a trend follower. I don't do sausage operation. I'm a trend follower. If we catch it right, it runs. We have a good run there, and we stretch it, and then I try to get a flavor in there of where are we in this run. If we are toward the end, I make the targets a little bit closer. If we are, for example, what was it? It was one of these that we were in a short position. I put the short target small, so it's achievable. What good is this if you come close, but you didn't hit the target and it reverses back? It's not what you make, it's what you keep. You want to have an exit. You want to have a realized gain. Unrealized gain is like toilet paper. That's no good. Pardon my French, but I don't, my dad was a diplomat. I'm not. I'm going to say it as it is. And so we try to balance that slightly, and that comes from just experience. These are sigma channels. Where is the sigma channel count? Here's we're running -2s. This was more severe, -3s. Okay, but look, we have not gone toward -3. A lot of bad news have come. It hasn't yet. Okay, so market is catching a bit. I'm bearish for 2019. First time I've been bearish in a while. As a matter of fact, we just published that in Time and Digest. But I think we still have a dead cat bounce here. I think for a short period of time. Why? Before we can go down, we need to bring some suckers in. It's just like going up. Before we can go up, we gotta catch some shorts, and they burn them. Once we get too much longs in, we burn them to the downside. Market is there to create maximum mayhem. Okay, it's a pyramid. The majority will lose. It's very elitist. The market is very elitist. Very few will win. And why? Many cannot win. Who's going to pay many? Think about the math. Few will win, and majority will pay for that. And along the way, you have commissions, you have a slippage. Okay, money doesn't go on tree; it has to move. You know, when you put a trade on, you're reaching in your pocket, taking the cash out at your leisure, at your approval. Bid the contract you signed for your account. That yes, I'm putting it on the table. Now, unlike Vegas, you can take part of it off. You can do that. You can change it. But sometimes they move so fast in front of you, like here, you're gonna say, what? And before Rabbit gets pregnant, you've lost your money. That's what happened exactly there. We were long, we covered, went short, and next day was $800. And people said, how did you do that? I said, don't even ask. I have no clue. That was pure luck. Really, realistically, I had a sense I was wrong to be long up there. It's just the way that they traded. During the day, I look at inside of the bar quite a bit. Now, I have other tools I don't show here because it's not subject of all this work, and it's kind of a little bit more esoteric. I'm trying to keep it simple. Remember, this product is made to appeal to a large number of people. Why? Half of U.S. population have some position in the market. A majority of them don't know what they're doing, and they have left it in the hand of what they think our professionals are. Instead, professionals come and tell me and say, well, hey, what do we do? Because they read Time and Digest, they see ranking. So we've tried to keep it very simple, very mechanical. Again, I'm thinking we're probably going to be having a basing here. I want to see a test of one of these two levels. We're under the cross. Most likely, if we fail here at a 50 bar, which translates to, you might want to write these numbers down for now. Of course, this dynamic, but 2740. If we fail at 2740, we got big trouble. We have a better chance for failure 2760 and keep the structure in place. Okay, I don't know if we're going to get there or not, but I'm thinking it's probably we won't, and we'll roll down. If we punch through, then yeah, we're going to rally up. But the question is why? What's the catalyst for that? Again, mine doesn't go on 3. We've been in a very bearish environment here, and all the associated indices. It doesn't change that much. Crude has to change. Transportation index has to move. It's not. Look at what transportation is. As you know, I write in PMT, transportation is a forerunner of economy 6 to 9 months forward. That's not my thinking. I read it from somewhere else. I read how it works. I read why it's there. Especially in this online economy, transportation is key. We hardly buy anything ourselves. Everything is click, click on your phone from Amazon. Somebody's got to deliver that, including the oil, because the environmentalists, the Dems, whatever you want to call them, the anarchists, whatever you want to call them, they don't want us to have another pipeline. So we have rails. That's why Buffett bought all the Norfolk Southern. So this tells me, and plus, it gives you good signals. This was 2 weeks before, in middle of January, 2 weeks before the troubles that we had in 26 for SPX. Here was 1 week. When they top, you know there's a problem. Now that we topped again here, we also had a cross here, the death cross. So unless this gets healthy, the path of resistance is down. If this continues to go down, there's nothing to hold SPX. It's going to suck it down. So this is part of Dow theory. So watch transportation. We do look at a D trender, which is the differential of the price minus moving average. This is 50 D trender. This is 200. How do I put these things together? Trial and error, many years. I've got 20 years in this. A lot of disappointments. I have ex-wife now. There's a reason. I wasn't trading well. But when you lose in this business, that's they tell to you that's the tuition you paid, and love your losers. That's what you're gonna. If it hurts, you're gonna learn a lesson from it. If it doesn't hurt, like last year, a number of cancels in January of last year. Why? And they're back, by the way. You know why? Oh, Fatty, this market is so easy. I voted for Grumpino. I'm up 17%. All is well. I don't need you. I said, fine. I'll leave the porch light on for you. What else I'm going to tell you? Remember Motel 6 ad? Guess what? They're hanging out at the door now. Why? Things changed quite a bit this year. And as it changes, look at risk is off here. This is Russell. Risk is off. Now, this has been a little bit quiet recently. But when it started to move, also, let's see, when did we peak? This peaked in August. Not even September, it started peaking there. That was a big signal. And look at divergence. We rose up in the price, but the trender is not going there. Why? It's a Momo trade. It's not there. It just moves barely up. If it was any good, it would be, the risk will be really ratcheting up. It's not there. It would be something like this, not there. So at this time, they're looking for suckers. If you buy it up there, you're holding the bag for them. And look at this term structure. It is just turned over. Okay? Russell is risk on and off. Transportations, forward economy. Again, those are written here in the package. Boom. In the package with limits and parameters. We give you high and lows. We give you the signal levels we're in, oscillators. We also do interpretation. Well, if we send you emails, say we're near launchpad mode, you need to understand why we said that, okay? And then for example, here we go. We give you the over and unders over the years. Max observed last 7 years, what these levels are. If they change, we update for you. So you know, if we give you a 10% above the Russell, what these values have been in the past. So we're not at extremes yet. That's bad news. We probably have more to go. So that cat, it's not a flush yet. Or what Jerry Seinfeld will call a courtesy flush, a double flush. It's not there, okay? It's not there. We're just, we're getting close. The other thing I don't see is baby with bathwater. You want to get nervous people when they throw baby with bathwater out. We haven't seen that yet. How do you see that? Big volume. Hasn't been there yet. So, all right. So let's go to the next chart. Welcome to post your questions if you want, anytime you want. I'll get to them immediately. Okay. This is a compound chart. SPX in two modes, weekly and daily. This gave a sell signal. I usually fade this, the weekly. Usually do, it works for me. Okay. But when it doesn't, when it is a right signal, it's strong. We don't know that yet. The weekly is on a sell signal, and we had an outside bar. You guys see the tea leaves, okay? So, can we be heading down there? Probably, I don't know. Was this a sell signal there? Hell yes. Look at that. This is a CI. It's a proprietary indicator for momentum. We've had it for 18 years now. No, 16 years now, actually. Yeah, 16 years, 2002. On a train ride to Montecito, California, I wrote this indicator. So is this one, but that's a different time. From here to here, we have a peak, okay? Big move down. The rush that you saw in the 2017 is gone. This is 2018, it's gone, it's not there. It got actually over that level, but much lower. So that was a big bad omen, big sell signal embedded. Now, recently we got this. This is actually one of the reasons. That was Monday night. If you put the time on, this is Monday night. Hold on. Yeah, the 10th, Monday night. That said, hey, if you go back again, look at these reports we sent you. Please look at these reports on Sunday night. Some of you just come in for this. Just a mechanical. You know what? Fine. But you're not going to learn anything. You're just kidding yourself. In the long run, you're just becoming a robot. That's not what we're trying to do with you. We could. A lot of services just send you an email. Do the following. We don't do that. We're trying to teach you. We're trying to give you. I come from a family of professors. Physics, nuclear physics, electromagnetic wave, mathematics, so forth. My mom always told me, you can't take your brain with you either. Bless her soul. Terry is a friend of families like my brother. He knows what I'm talking about, how she was. You can't take your brain with you either, which means that you have to teach others what you know as you go. So what we try to say that limit is we got over 80, watch out. This is a local minimum. The sell was huge. Look at me. Look at what kind of bar we have. That's a hammer. You gotta read the tea leaves. You gotta be good with tea. That's why I got Tico. Tico teaches me how to be good with tea. Remember, he loves Rumi and he drinks tea. I suggest Fuminot from northern hills of facing Caspian Sea. Best tea in the world. That's his favorite. Anyhow, this comes in, so I gotta get along, Murray. I gotta get along. So we write to Time and Digest. Yesterday was a surprise. Today's another surprise. This was what do you call it? To me, this was AMI. AMI getting a corporate immunity, which the other one was obviously Manafort slash Cohen. I guess, or Cohen filings. Then Cohen was done today, but the key part was the AMI. AMI messed everything up because that basically nails the coffin. You have collaboration now. By the way, Pence can solve all of this. It's very simple. Pence comes out and says, trade war is over and we're going to rally. Usually the caretaker, that's what happens with caretaker. Why do I say that? Look at history. History often repeats itself. So now this is Momo and SP1. This was written also on a flight, not on a train, but a flight from New York to LA, back from a meeting at the hedge fund, that they said we need to understand the volatility of SPX itself from stand for breadth. Is breadth. Well, this is not regular breadth. This is modified. These numbers mean nothing. The issue is position. So we've come back. We dropped pretty hard, a little bit lower there. Showed we have some strength coming. Lower price, higher Momo, and so the drop wasn't as deep as we had here. So it should again validate and go up slightly. We're not overbought, but we're above from oversold. We should rally a little bit. Now, Momo is a faster brethren of this. We should look for divergence. Here's your up move. Here's your down move. Here's a big sell. Here's a big buy. This was a good buy, and we rallied. It was a very strong buy. As a matter of fact, look at this diversion versus this diversion. Okay, we came down to lower price, higher Momo. Again, Momo is very, very short term. SP1 is longer term. This is for the bitch hedge guys. This is for you and I, because we trade small. They trade. We're a little what do you call it? The 26 footer for fishing. This is the USS Nimitz class. These are the big guns. They can't move that fast. They need something slower. Yeah. So that was done for them, and it's been a pretty decent indicator for us. VIX. Let's go to VIX. We gotta look at volatility. What happened here? Hold on. Okay, this is volatility. Again, I'm known for that. My work was done at UCLA with Geske, Roll, Whaley. Whaley is the guy who did VIX. So I knew in option pricing. I used to trade at when I was working at Northrop. A little HP65. I'm putting black shows. The toughest input is what? Volatility. Everything else is simple. You can look at date, how much date to expression. You can look at interest rate. You can look at dividend. You can look at the strike versus the current price. The one that's tough, and it's an art form, is volatility. So I made that my mission from a few days after the silver crash, which was March of 1980, late March of 1980, was that, hey, I need to understand volatility, and I'm a math guy, I'm a physics guy. This stuff should be easy. Well, it wasn't. Then, of course, after many years, I moved to Chicago. I really learned I didn't know much about volatility. Academically, I knew, but not from practical hands-on. And if you marry the two, you'll be a good one. But you got to marry the two. Few people do that. Here comes other guys who were my mentors in Chicago. One of them, especially Admiral, 27 years on the floor of CBOE, one of the early primary designated market makers, DPMs, designated primary market makers. One of the founding members of Wolverine, and vice chairman of the membership, and one of the 8 guys who did the hybrid, which is a current business model. So I learned a lot from him, and I had the privilege of trading with him 2008, 2009, and then he liked what I was doing, and we've worked together since. Anyhow, volatility comes in shock waves. That was trying to set you guys up. We're looking at weekly there. Pay attention. Look at the orderly this comes. Very close, very close. Look at that. Not necessarily daily, but look at the weekly. Now we're coming to something different. I'll submit to you humbly that this is slightly different. We'll see. We're slowly rising. We're not getting spikes we did before. We're not doing these railroads. We're just rising. That's a problem. For day trade, paradise. As Arthur Scott Fitzgerald wrote at the second floor of College Club, my social club, and also Muller's at Princeton, was this side of paradise. We're entering paradise here if you're a day trader. If you hold money long term, the buy and hope, forget it. Forget it. You're going to be in trouble. This eats into that account very easily. This is alarming, the shape of this. Again, for the sake of the nation, I hope I'm wrong. We're just an observer. We're observing data. Remember, these are billions of dollars traded among thousands and thousands of millions of trades. So it's not a guess. The market as a whole is not wrong. So we have to interpret those. Look at these when they go, this is a 4 sigma. Look how spikes we have had there. This is not data error, by the way. Why? They correct that. This is VIX. They correct that. Within a day, they correct it if there's a spike. I write back to them. We challenge them. They come back and fix it. As a matter of fact, Monday, I'm having lunch with TradeStation executives. They invited me to come out. I said, sure. When I have problems, I'm on the phone calling them. Why? Because it's impacting all of us. Does this compare to 2007, 2008? No, sir. Hi, Ralph. No, sir. No, we don't. First of all, we're not as weak. The banks are not that weak. We don't have it. We have a different challenge here. Okay. We have a constitutional crisis here. That's our problem. It's not the banks are weak. It's not that the real estate is falling off the cliff. Real estate has been down 5 months in a row, maybe 6. Autos and cars are two mainstays of economy, not doing good. Transportation index, not doing good. Interest rates up. We're going to get to that too. Murray and Murray having issues. That's a separate issue. We're going to talk about that too. But no. And then part of the problem is actually my humble submission is that as a Republican, diehard Bush 41 and Ronald Reagan Republican, we got conned. And we have to clean. But the good thing about the system here, it cleans itself. It's going to take a little bit of time. The point is, and we have a lot of debt. So hopefully this trade war will go away. I don't think our supreme leader has full faculties that we need. He doesn't read briefing books. He doesn't pay attention. He was at the bottom of the class at Penn. On and on and on. And he's a stable genius. Well, he's getting us into a lot of trouble. Again, as a Republican, I'm happy Clinton is not in charge, but I think maybe we got the worst. Maybe we got the worst deal. Well, only time will tell. History will judge that. But I do believe this volatility is signaling a problem into probably. I think I would say, and remember, stars have impact on this, believe it or not. Spring equinox and fall equinox have big impact on that when the stars line up, plus or minus a couple of days. So I would say probably by March, we're going to have some major issues. Yes. No, I don't think so, Scott. No. But actually, George W. I mean, Grompino has been pretty decent with banks. No, I don't think so. I don't buy that. There's some weakness you see in BKX, but that doesn't mean that the structure is weak. We're talking two different things, Scott. Don't confuse the balance sheet and the stock price. Okay, you're looking at stock price. I'm looking at balance sheet. I'm looking at management. I'm looking at their assets. Okay. The banks are very strong. All right. It's just that we have a lot of debt. That's our biggest problem, I think. And the trade wars, which causing the cost of goods go up, is impacting auto and housing. Those are the mainstay of the economy. So, all right, let's move on to trend. We had a huge buy signal. I mean, huge buy signal on Monday. Gotta get long when you see that. Okay. Now this is skewed up. A lot of research has gone to this. Actually, a friend of mine at SIBO suggested we do this. We have to change this slightly. Again, empirical observation. Listen, 80% of what we've done here is not ours. We just did it a little bit better. We know different than Microsoft. We didn't invent everything. We just did it better. We took advantage of what other people have done from their tears, from tears and sweat. Repackaged it, a little bit better technology. Kick it around with a couple of more professional people in terms of actual hands-on training to see what works better. Not so crazy about 5-year TradingQ, this which is for NASDAQ, but on SPX, I like it. And this was a huge, huge buy. Look at that sell. Okay, look at these cells. Yeah. Now, these were empirical observation. These limits are where that signaling is. Okay, but this is a huge buy. I think we're going to pull up a little bit, and then once we get to these limits, we have to recalibrate. Always, every few days, you got to recalibrate. I have more indicators. I'm going to get there to show you. SQ, favorite of Captain Tico. This is the tail risk. Those of you good at options, especially SPX, this measures the tail risk of SPX. This is very low. We haven't seen turmoil until this is up. Actually, this is very low. This is not mom and pops. This is the big guns. Only big guns can afford trading SPX, especially at the tails, the two ends. So this is very calm. So last time we had a chat with Captain Tico, because his, hey, listen, this is speaking of Captain Tico. We went to him and said, hey, what's going on here, Captain? Where's my imaging? There we go. Here's Captain Tico. Really taking it easy. There's Captain Tico. There you go. That's Captain Tico. Taking it very, very easy. He came back and said, listen, the SQ is low. If the SQ is this low, I'm not afraid. Why are you so afraid? I said, okay. Leadership and wisdom. It's ahead of us. Okay, fine. So we're low. This is the all-time low. This is the all-time high. By the way, their own design called for 150. I don't know if you guys read the Demon of Our Own Design. Brooke Stabber used to work for Gil Caffrey over at Front Point. The guys who did what they call it for Big Short. I don't know if you saw the movie Big Short. It's on our blog. You don't need to go get it there, but I want to just show you the cover. Go to Amazon, get it there. I think it's still there. Let me show you. Just you see this. On the bottom of our blog, we give you overall suggestions here. There we go. Of things to read. This one. There we go. The Demon of Our Own Design. Brooke Stabber. He used to be a money manager for Caffrey over at Front Point before he left. He went back to Tiger. I think Gil fired him, but you didn't hear that from me. Oh, is this being recorded? Anyhow, read this book. Again, SIBO is doing that in their great wisdom. They've designed something that exceeded their design limit. So, and this was saying there was an issue, and sure enough, after that we rolled down. Okay, this is we put that low in middle of August, and we saw what happened in October. So that's not the case now. We're very low. So I think we're probably gonna base here or maybe sit here. We have dropped 10% here. And I don't know if we're going to drop more yet. New money, new year, new ball game. Treasuries, Murray and Murray. This is the saga of Murray and Murray in Beverly Flats. So we come up. We've been rising in the yields. This is a 91-day discount rate, 5, 10, and 30 YTM yield to maturities, and this dash line is the 7-year look back, what level that has been. Why 7? I don't know. I like 7. What do you call it? Just Bush CVN 77 was George Herbert Walker Bush carrier. That was CVN 77. George W is 43rd. So 7 is my lucky number. My car is 7 patent, the license. So I like 7. We got into trouble in 2007. That was a market high. Anyhow, so you go back and you plot these, and there's your CI giving you the signals. So you get into this period, and Mrs. Murray says, hey, Murray, what's my budget for Hanukkah? He goes, no problem, honey, no problem. And then the market drops like this. Well, remember, Murray lends money out based on VIG. That's his VIG. But the VIG is he's got a spread over the Fed fund, except he charges that daily. So this is 2.375. That's a going rate if you borrow from Murray. 2.375 per day, not per year. That's a year by the Fed for the Fed funds between banks. But Murray, he's got to make some money. He's got to pay, right? So that's his daily rate. Well, as these things start dropping, he panics. He cuts back on the what do you call it? The Hanukkah gift budget. Now we know that I just heard over the weekend that they're in marriage counseling, and this time it's a group session. Murray wants to save some money there too. So this is the Murray show. So this is you got to watch. This tells me actually the economy is slowing down. Also, crude oil price thing telling me the same thing. If you come back here, the vols. Remember, so you have to watch. You got to look at a lot of stuff. There we go. Here's the crude. This is why Captain Tico is taking it easy. Oh, this is weekly. Yeah. Hold on. This is the lead contract. Hold on. You know, when at 74, 73, people came out. I don't know if you follow Captain Tico or not. You should on Twitter. About here, they said $100 oil. He came and looked at it and says, what? Everybody and his brother. And he was being so good. So we're getting all these emails. Do you think we're going to go to 100? Some of these hedges, the crowd in Stanford, that area, coming to me and saying, hey, listen, are we going to? I said, listen, that's not my area. Let me have to talk to Captain. Captain comes and look at it. He says, you know what? I want to get short. So he goes to his feet and puts a short trade on for you guys. That's all she wrote. We dropped 22%. Some days were 2-3% moves, 4% moves. Never heard of before. This is the largest commodity by dollar value. The only time it was better than this is before I had Tico. When I made a short on Time of Digest on Benzinga, crude was at 96, and I know for 2 weeks I got death threats and people went telling me go back where you came from because I projected a 33 price from 96. 2/3 of OPEC. Everybody thought I'd smoke something. I remember I would be at Stocks and Jocks, and I used to be because I live in Chicago. They asked me to come because I would call in. They said, no, come in here. You're down the street. I said, 6 in the morning. What are you guys talking about? They said,